Hello team, hope everyone's doing well. Back with another video in regards to understanding the real secret in trading consistently. Guys, this is the only holy grail that you actually have in trading. And this is not a strategy. This is not some one magic pill per se, but this is a law. And as we know from laws need to be abided to. And this law is called the law of large numbers. This is what casinos and insurance companies as well use to either predict the expectancy of eventually their profits or predict the expectancy of things happening, therefore eventually having a premium put behind it. So for us as traders, the law of large numbers is such a huge concept, which frankly I've never heard spoken of until recent years, but it has been used for hundreds of years in the casino and the gambling industry. Now people are going to potentially ask me, Obi, are we now gamblers? What's going on? And so on and so forth. No, that is not the case. As we know, casinos and the gambling industry gets paid billions upon billions of dollars or pounds to remain live and to be positioned in areas where they can attract customers, i.e. very expensive hotels. But what does that mean for us? How do they remain in business? Well, they understand this factor. They understand the fact that eventually the amount of experiments that they may have over a large period of time will lead to a certain outcome, which will give them a certain value per se, which in theory means that from a mathematical standpoint, the law of large numbers enables the average of the results obtained over a large period or a large sample size experiment to then converge to its true value. So we very much know that in blackjack, the casino has a 2% edge over the gambler. So what they understand is that over a large series of sample size, therefore over a large amount of plays per se, they know that they are going to eventually come out on top. So for us as traders, we very much know that we're meant to be trading the markets with a little edge. Doesn't matter how little it is, but as long as we have an edge in the market and we play those variables over and over and over again, we are going to be eventually remain profitable. We are eventually going to be profitable. This is huge for us as traders because we don't have such a huge edge. But if you have a particular set of variables, we are in a position where we can take advantage of the market over and over and over again. This is the only way that we can enrich ourselves. Why? Because if you keep chopping and changing the variables, or one day you decide to trade in a completely different way, or one day you decide to over risk and do something that is completely against your trading system, you're never going to attain that level of certainty, and you're never going to attain the real potential of the edge because the variables keep changing. As we know, in a casino, you have a set of games: blackjack, craps, and roulette, and so on and so forth. But what do we know about these games? The rules don't change. The rules remain the same. What does that mean? Is that in theory, we're going to be in a position where if we abide by the same rules, and we're obviously not changing the dimensions of the roulette wheel per se, or we're not changing the amount of cards that we're using for blackjack per se, we're going to lead to the same outcome. It doesn't matter if a gambler wins big today and tomorrow or the day after. What matters is that over 100, 1,000, 10,000, 100,000 plays, they know, the casino knows that they will come out on top because they still have a 2% edge over the gambler. So eventually they're going to make their money back and a lot more. What does that mean for us as traders? If we stick to our variables over a set of 50, 60, 100, 120, 200 trades, we are going to be profitable in the long run. The problem with us as humans is that we love certainty. We thrive in certainty and we don't do very well in uncertainty. So as soon as we experience a few losing hands, we are upset. We get angry and we become impulsive. We start making irrational decisions, which stop us from actually allowing our edge to play out over a large period of time. Whilst professional traders and professional gamblers, let's say, but more importantly, businesses like insurances and casinos understand that if they remain with the variables that they have studied over a large period of time, they are going to eventually come to its true mean, which is the actual real expectancy of the edge that plays out. So when we go and say that we have a 50%, a 60%, a 70% win rate, we are saying that we have a 70% chance of winning over losing. But we know this because we've not only done it with 10 trades, we've done it with hundreds and hundreds and hundreds of trades with the same variables. Therefore, giving us the certainty that we're looking for in an uncertain environment. And we don't need to know what happens next. That's the reason why Mark Douglas is always mentioning you don't need to know what happens next, as long you know that you've studied your variables over a large period of time, which will give you a certain expectancy. So I hope that breaks it down for you guys. That is the real holy grail of trading. That is it. So this goes to really show that there isn't a perfect strategy and there is no need to have a perfect strategy. All you really need to have is a strategy that has a little bit of an edge. And of course, you want it to have multiple risk to rewards and asymmetrical risk to reward so that you don't have to be right on every trade. And most importantly, sticking to those variables. Sticking to those variables will allow you to play the real edge over a large period of time, which will lead to the results that you want. Take care, guys. Follow for more. See you later.